Hello everyone, I'm Dr.A.G.Mythili, Assistant Professor, Department of Commerce with Finance, Dr. SNS College of Arts and Science. In this video, I'm going to speak about history of banking in India. Before going to that, we can see how the word bank has been derived from. So the word bank has been derived from French word banco, bancus or bench or bank, which means a bench. In fact, the early Jews in Lombardy transacted their banking business by sitting on benches. When their business failed, the benches were broken and hence they were called bankrupt. So another common held view is that bank might be originated from the German word bank, which means joint stock fund. Of course, a bank essentially deals with funds. In due course, it is Italianized into banco, Frenchanized into bank, and finally into bank. So a person who is dealing the banking business is called a banker. So evaluation of banking in India. Banking in India forms the base for the economic development for the country. Major changes in the banking system and management has been seen over the years with the advancement in technology considering the needs of the people. So the history of banking in India dates back to before independence, that is 1947. So it was divided into three phases. Phase 1 deals with the early phase which lasted from 1770 to 1969. Phase 2 was from nationalization of phase which lasted from 1969 to 1991. Third phase was the liberalization of banking sector reforms phase which began in after 1991 and continues till date. So here, history of India in the banking in India is divided into pre-independent period and post-independent period. Pre-independent period is from 1786 to 1947 and post-independent period is from 1947 to till date. And the post-independent period is classified into three: pre-nationalized period, post-nationalized period and liberalization period. Pre-nationalized period is from 1947 to 1969. Post-nationalized period is 1969 to 1991. Liberalization period is 1991 to till date. So pre-independent period, that is from 1786 to 1947. The first Bank of India was the Bank of Hindustan, established in the year 1770 and located in the Indian capital Calcutta. However, this bank failed to work and closed its operations in 1832. During the pre-independence period, over 600 banks have been registered in the country, but only few banks managed to survive. Following the path of the Bank of Hindustan, various other banks were established in India. They were the General Bank of India from 1786 to 1791, Oudh Commercial Bank from 1881 to 1958, Bank of Bengal in 1809, and then Bank of Bombay in 1840, Bank of Madras in 1843. So during the British rule in India, East India Company has established three banks: the Bank of Bengal, Bank of Bombay, Bank of Madras, and called these three banks as the Presidential Bank. These three banks were later merged into one single bank in 1921 and they were called Imperial Bank of India. The Imperial Bank of India was later nationalized in 1955 and named as State Bank of India, which is currently the largest public sector bank in our country. So Allahabad Bank was formed in the year 1869. Punjab National Bank was established in the year 1994. Bank of India was established in the year 1906 and Central Bank of India was established in the year 1911. Canara Bank was established in the year 1906. Bank of Baroda was established in the year 1908. So coming to the post-independent period, that is from 1947 to 1991, at this time when India got independence, all the major banks of the country were slightly privately, which were the cause of the concern as the people belonging to rural areas were still dependent on moneylenders for their financial assistance. So with this aim to solve this problem, when the government of India decided to nationalize the bank, these banks were nationalized under the Banking Regulation Act 1947, which was passed in the year 1947. Reserve Bank of India was nationalized in 1949. The formation of the State Bank of India in 1955 and other 14 banks were nationalized between the time period 1969 to 1991. There were banks whose national deposit were more than 50 crores. So in 1969, 14 banks were nationalized, that is Allahabad Bank, Bank of India, Bank of Baroda, Bank of Maharashtra, Central Bank of India, Canara Bank, Diwan Bank, Indian Overseas Bank, Indian Bank, Punjab National Bank, Syndicate Bank, Union Bank of India, United Bank, UCO Bank. So after 1980, another 6 banks were also nationalized, the number to 20. These banks include Andhra Bank, Corporation Bank, New Bank of India, Oriental Bank of Commerce, Punjab and Sindh Bank, Vijaya Bank. Apart from the above mentioned for 20 banks, there were 17 subsidiaries of SBI were being nationalized in 1959. State Bank of Patiala, State Bank of Hyderabad, State Bank of Bikaner and Jaipur, State Bank of Mysore, State Bank of Tirkon, State Bank of Susra, State Bank of Indore. All these banks were later merged with the State Bank of India in 2017, except for the State Bank of Shishra, which merged 2008, and State Bank of Indore, which was merged in 2010. So coming to the impact of nationalization, this lead to increase in funds and thereby increasing the economic condition of our country. So it increased the efficiency. So it helps in boosting the rural and agriculture sector of the country. It opened up a major employment opportunities for the people. The government used profit gained by the bank for the betterment of the people. The competition decreased, which resulted in increased in working efficiency. So liberalization period, that is from 1991 to till date, to provide stability and profitability to the nationalized public sector bank, the government decided to set up committee under the leadership of Sri M. Narasimhan to manage the various reforms in the Indian banking industry. The biggest development was the introduction of private sector banks in India. RBI gave license to 10 private sector banks to established in the countries. These include Global Trust Bank, ICICI Bank, HDFC Bank, Axis Bank, Bank of Punjab, Indus Bank, Centurion Bank, IDBI Bank, Times India, Development Credit Bank. So thank you for watching.